When a decedent dies, and if it's the last surviving spouse that dies, the reverse mortgage, if there is one, usually becomes due and payable. Most reverse mortgages are insured by Fannie Mae or Freddie Mac, and they will typically allow an estate up to 6 months or perhaps even 9 months to repay the loan. But they're going to want to see that the property is being marketed for sale to satisfy the obligation to pay off the mortgage that is due. Fiduciaries or trustees or executors will often contact us with a request to pay off a reverse mortgage because one of the beneficiaries wants to keep the house. If a reverse mortgage isn't paid off in 9 months, the lender will almost certainly foreclose, and you don't want that to happen if you have equity in the home. If you don't have equity, who cares? It won't show up on your credit report. But if there is equity in the house and you want to preserve it for the benefit of the trust or estate, you want to do your best to get that reverse mortgage paid off as quickly as possible. Your other option is to sell the property to satisfy the reverse mortgage. Let's talk about loan-to-values on reverse mortgage payoffs. By the way, this information also applies to fiduciary loans and loans to trusts. Typically, when you're doing a reverse mortgage loan payoff using private money, they're often called hard money lenders, the maximum loan-to-value that you're going to be able to securitize a property with is between 55% and 65%. And truthfully, you would be lucky to get anything above 55%. Because private money lenders want to know that if they must take a property back to get a loan repaid, they will absolutely make sure they have sufficient equity to do that. They are much more restrictive on loan-to-value than any institutional lender would be. Institutional lenders with Fannie Mae and Freddie Mac programs will leverage up to 96.5% loan-to-value with 3.5% down. So institutional money allows you to leverage much higher than private money lenders. Keep in mind also that private money lenders who pay off reverse mortgages will typically be offering expensive terms, and usually only short-term, perhaps 12 to 24 months max. Private money lenders aren't cheap. They don't offer 30-year mortgages, but they can be very useful if you need to preserve equity in a property long enough to get the property sold or repurposed. If you have questions about reverse mortgage payoffs, call me. I'm Dan Collins at Integrity Estate Lending. Thank you.